Welcome back to another episode of the pod. It's been a few weeks. We've taken some brief vacations, and spring break has happened, so it's good to be back. And some pretty major events have taken place and are in the midst of taking place this week and last week. So it'd be a good opportunity to revisit a couple topics we've discussed already. One being tariffs, and another one being the upcoming Canadian federal election. So there's been some clear changes, obviously, since we spoke about it last. Mark Carney has been elected as the leader of the Prime Minister and the leader of the Liberal Party, and we're facing an election in just under 3 weeks. So we'll talk about, I guess, individual thoughts and potentially some of the stuff that we've seen and hopes and priorities for the future. So why don't I kick off with just some recent events related to tariffs? So this week we've seen some pretty major events, definitely the most dramatic in my lifetime, in terms of the U.S. president rolling out tariffs, or at least threatening, and then sort of at the 11th hour withdrawing or pausing the tariffs to certain nations. But what we definitely saw was sort of the Wall Street market's reaction. So two things that I thought would be interesting to get your guys' thoughts on. So one was the crazy diabolical drop in equities, specifically U.S. equities, but around the world, all markets were down. A lot of indices were, posting 20-year lows. Some massive sell-offs, and then additionally, something that I think spooked some people internally at the administration that potentially contributed to this pause was the sell-off in U.S. Treasury. So the bond market also had quite an alarmist reaction, and what ended up happening was it drove up the cost to borrow, and so we've spoken previously about the potential for the strategy. One of the priorities, or the reasons for doing these tariffs, was to try and reduce the cost of borrowing, because the U.S. has such a huge debt burden, and they're refinancing something like $5 or $10 trillion this year, which is a huge amount of money. And so obviously any basis point reduction in the cost of borrowing is a massive savings when they're spending over $1 trillion in interest. But anyway, so the market went the opposite direction. So there's murmurings online around whether it was a nation state, whether it be China or Japan, selling U.S. treasuries. I don't think anybody will ever know. But at any rate, there was a massive spike, and a lot of people were very alarmed that the cost of borrowing was over 5%. And what's even crazier is if you ignore inflation, you're able to buy a 30-year U.S. Treasury that was yielding over 5%, which is a pretty solid return for a U.S. Treasury. So, anyways, I guess we'll start with the tariff response. Like, what are your guys' thoughts, Michael? Like, we've talked about this before, but like in terms of a go forward posture, what are your thoughts on what's happened and what you think is going to happen next?
Yeah, well, we keep going back to the art of the deal, the Trump's art of the deal, where he's, it's just telltale signs. Everything he's doing follows that playbook so well, where he creates all that instability and uncertainty, and in the final hour, he pauses. So the markets are just reacting very heavily, though, to all this volatility. And you could see, like, the VIX. I was talking to Andrew about it the other day, which is a volatility index. Like, that's been at one of the the all-time, not an all-time high, but very close to it, I believe. Also, gold has skyrocketed because investors are looking for stability. So it has had a massive impact on the economy. China, it seems like the U.S. and China has been pushing back the hardest. It seems like China, for some reason, Trump keeps talking about this currency manipulation. He's bringing up currency manipulation. He's bringing up the trade deficit. And I don't know all the inner workings of these unfair dealings that he's talking about, but for some reason, he's really set his target on China. And I think they were up to like 105% on tariffs. I don't know if that was on goods across the board, but on most goods. China was countering. Last I heard, it was around 50%. Hard to keep track of it. It's constantly changing. Now there's that 90-day pause. Was it 90-day pause now? And then that was
Yeah,
yesterday.
for China.
except for China. Okay, well, the
Yeah.
market reacted well yesterday. Then it was up, and now it's down. So yeah, I'm myself. I'm having a difficult time wrapping my head around all of this. In terms of Canadians, I think we're still set at some of the similar tariffs. I believe it was just automotive was one that was added. Was that recently? He put a tariff on automotive vehicles and auto parts, or was that from the
Yeah.
last round?
So it was the existing round. So the I would say the pre-existing sort of March tariffs related to aluminum and steel and autos is still in effect. And what I read was the his messaging that the nations that have retaliated. So there are only two countries that retaliated thus far, which is Canada and China. And so his message was that the countries that retaliated are not going to receive a 90-day pause. He's essentially saying, singling out those countries. However, what I can find, and again, this is just based on the information I've been able to see, is that Canada is not actually he hasn't increased tariffs on Canada across the board. And one of the reasons for that is going to be the existing free trade agreement within North America. So but definitely China is active and has gone ahead, and China has retaliated. So there's all sorts of horror stories, especially for small medium businesses, because a lot of them purchase product either precursors to finished goods or the finished goods themselves from China, and so for them to have essentially double their cost of goods is going to be pretty dramatic. But so far, it seems like Canada's been spared, so we'll see where that goes.
Yeah, you see those pictures of the cargo planes being loaded up with Apple iPhones being shipped out of the Chinese manufacturing plants to the U.S. Andrew, this is a topic that we've been kind of it's being broached quite frequently. Like, what are your thoughts on all this, and how about China and its involvement with some of its neighboring Asian countries? Like, is that still
Yeah, like I
happening?
think, well, I think there was definitely talks at one point how South Korea and Japan or and China are gonna create their own trade agreements amongst themselves. So I don't know. Like I mean, listen, the issue is some of these damages that Trump has created to these relationships around the world to our allies and friends. They're not gonna just turn around and just say, hey, you know what, everything's all good again, right? There's definitely some lasting damages here, and like I was mentioning to you before, Michael, I think this is just going to push some of the allies closer to to trade amongst themselves, or to either to create certain trade agreements or trade with China, right? So some of these things are going to happen if this continues, and it definitely creates a lot of uncertainty around the world, and and every markets want some sort of certainty, so they will probably try to reach some sort of agreement and may exclude the U.S. if that's the case.
I got to push back on that one piece. So I think it's really interesting. So one of the comments I heard was talking about the fact that, like, so just to the point about how much of this is actually reorganizing global trade. And I think the if you look at the two countries of China and the US and you compare, the sort of strengths and weaknesses, the US is sort of the global consumer, right? They're the global purchaser, and China for, essentially the global producer. So
Hmm.
they're the world's workshop. And so I think, what's kind of been forgotten here is that, the US, China needs the US in terms of purchasing arguably more than the US needs China for cheap production. And what I mean by that is you look at the ability, and it'll take time and money, but it's possible for companies like Apple to manufacture their iPhones in other countries at comparable rates. And a lot of it isn't labor anymore. A lot of the historical comparative advantage of China, especially, was low labor rates. But in reality, a lot of it is now automation and manufacturing prowess and the ability to spin up production very, very quickly. That's not going anywhere. But I do think that there is a way that the U.S. can, and the supply chains can, actually reorient themselves to different countries. Whereas you can't just take, you can't replace the level of consumption and the purchasing power that the US market provides. So if the world sort of says, hey, we can't sell goods in the US anymore, it's not like all of these nations, including Canada, are going to start to say, like, oh, well, we're going to start buying an extra $10 trillion worth of goods every year. Like, it doesn't, there's no way that that's going to happen. So I do think that the US government, the administration has done a good job of essentially saying, and the way that I see it is, we talked about this previously, like I think there's a whole bunch of different strategies, and to your point, Mike, about the negotiations. But I think a big part of it is we're the golden goose. Like we're the world's leading consumer, and we're buying all of your goods around the world, European cars, Chinese, goods, manufactured goods, whatever. And you're not reciprocating in terms of the cost, the ability for our companies to sell into your country. So one example was, I didn't actually know this, but it came to pass that essentially he said, if your country, this is essentially a reciprocal tariff. So if your country calls me up and says, I just want free trade with the US, I won't impose any restrictions. The US will essentially remove those restrictions. And Argentina was, I believe, the first. So Javier Milei essentially said there's no tariffs on the US, there's no restrictions on US goods. And in turn, the US said that's the first country that they've signed an agreement with full free trade. So
I
no
don't
tariffs.
understand why the U.S. would do that though, because think of the trade deficit. Like, think about how much more the U.S. is buying from Argentina versus how much, like you're talking about, like the sheer buying power. So by them doing that, like think about it, by Argentina dropping this tariff, how much is the U.S. really poised to gain? Depending on how much Argentina is buying from the US, I would imagine it's a very small amount. When I was looking at the statistics, apparently 50 to 60% of exports from China go to the US. So they're buying like 50 to 60% of their goods. So you're right, Kyle, like you're on the right path. Trump and the US administration is trying to exploit this. They're saying it might not be like this forever. We have this buying power now. We're such a big customer. Think of like our businesses, like they're that key customer that gives so much business. So now they're trying to throw their weight around and exploit that. I don't know though. I don't know if this is the right strategy. It's long term, that's for sure. Like short term, it's causing a lot of short term pain.
But I think it's interesting. Like, I don't know enough about the internal tariffs that existed in Argentina before. But if you look at Canada, so we've got a couple major uh, tariffs from the U.S. into Canada, and one of them is the supply management with dairy. And so essentially, and this affects dairy farmers in Canada as well, because they're essentially told how much they can produce, and it controls the price of the commodity. And then the other one obviously is softwood lumber, or we'll call them construction materials generally. And so there's the reason that the country of Canada has imposed tariffs on the U.S. is to protect those industries, is to say, hey, if you're gonna to prevent those industries, so those other countries from flooding our Canadian market with a less costly alternative, which in turn drives the revenue down for our Canadian companies. And to be fair, China does the exact same thing, right? Like China, the big criticism of China from the US has been that the Chinese don't give market access to US companies. And Trump said something similar about US banks, and we've talked about this as well. Like, you can't, the US mobile carriers, US banks, there's a whole lot of large industries that the companies simply can't operate in Canada. And so I do think, I agree with you that the US, those other countries have far more to gain by selling to the US than they have to lose by buying from the US. However, we don't really know what that impact will be. Like, what happens? I don't know what let's say beef, because there's Argentinian, agriculture is massive. Let's say, Texas starts exporting beef to Argentina. That's 25% less because there's no tariff. Well, what's that going to do to beef production and the farmers in Argentina? Well, it's going to obviously drive a lot of them out of business. So, but is that a bad thing, right? Like, if they're going on to other productive, parts of society or the business community, is that going to be a net deficit? And I think that's something, frankly, for Canada, I think that's something that would be good. I think a bit of a shot across the bow to say, hey guys, like, if you can't make money on the global stage selling dairy products, then we got to sell something else, right? Like, if you have to artificially constrain the amount of production in order to get a price that makes it possible to break even, the economics there just don't work. And so maybe we should be having a harder conversation about, can we actually support this industry? Do we have the innovation, the automation, all the things that, drive down prices and make us more productive? Let's have a discussion about productivity rather than like, oh, well, we need to protect our industries by essentially making it, too costly to trade with anyone else.
Yeah, that makes sense. That makes sense.
What do you think, Andrew?
Well, yeah, I think it's a good point. But like, if their plan is to make sure the trade deficit is going to get lowered, with some of these countries, it's impossible, right? Like, you look at some of the countries, they can't buy U.S. goods. They're just, their economy is not there to support them buying U.S. goods. So for sure, there will always be a deficit. It's just like your employer-employee relationship. There will always be a deficit, right? Like, it's just, to me, is to achieve that reduction is very difficult. And like you said, Kyle, like, China is, the production center of the world. So there will always be a deficit there. I don't know if it really makes much sense to drive up, essentially try to sell more to the world. U.S. has always been a consumer market, and that's because they're a very rich nation, right? Their value is the reserve currency across the world. They have a higher like a workforce that is more knowledgeable, and they have like higher cost services. So that's why it's how can countries like Vietnam, Philippines, Cambodia, be buying from the U.S., and how can that ever be in surplus?
Yeah.
That
No, I,
me.
I agree. Yeah.
And why is the trade deficit with like a country like Vietnam so massive? It's because Vietnam has just been selling them really cheap goods, right? And they're just not capable of buying, and that's why the U.S. is buying so much from countries like Vietnam, because the cost of manufacture and produce in these countries are so low,
So
right?
have you heard? I haven't read anything about Vietnam. I read that they had one of the highest tariffs, reciprocal tariffs, partially because Vietnam had high tariffs on the U.S. But like,
It was mainly the trade deficit. That's what they based it on. Like, they were basing it on trade deficits, and of course Vietnam is going to have a like a very high trade deficit, right? Like, and some of these really poor countries, like they're developing countries, they don't have the economy to support buying U.S. goods and services. It's just very expensive, right? So they have to buy, between themselves or within the country, and then export. So that's why these are real export-driven economies, right? They're just relying on the exports to consumers like the U.S. And in turn, the U.S. and some of these companies repackage this stuff, and listen, they just sell it to other consumers, right? And that's how the economy is. So, to bring up this to decrease this trade deficit, I'm not sure if that's the right approach here.
They definitely want to bring more, manufacturing into the country. Like that's been clear from the beginning. And Kyle and you, Andrew, you both brought up a good point. It's probably, we talked about this, Andrew, where we were talking about bringing manufacturing back. It's likely not going to create like a ton of manufacturing jobs, or maybe a different kind of manufacturing job, because of the advent, like Kyle was talking about, of technology and process automation. So a lot of these smart plants will require very little human intervention. So it would drive up GDP, though, gross domestic product. It would drive up investment into the country, taxation, lots of tax revenue. However, in terms of jobs, like, what was the unemployment in the U.S.? What did you say it was? Was it 4% or 7%?
Something like very low, is like 4 or 5%, something like that.
Yeah, so it's quite low. So if they want to bring all this manufacturing back to the U.S., Yeah, there's not a massive available workforce to put in there unless they start. And then my question was, are they going to start uh, driving up immigration to support this manufacturing, or is this all, mainly automated manufacturing facilities where it doesn't require any kind of labor
Yeah,
in
and
massive?
to your point, Mike, like it's very interesting that Tim Cook mentioned this in one of his interview. It's just simply the skill set that exists in China, like that exists there that doesn't really exist in the U.S. Like I think he was talking about one of the roles, like a factory engineer or some sort of engineer that at the factory, that when you put up a listing, there's probably like a hundred applicants, but in the US you might be lucky to find like a couple, right? So there's certain skill set and certain knowledge that exists now in countries like China, Vietnam, that are very focused on manufacturing, and now that you're going to have to try to bring all that back. And even China, like the cost to produce has gone up a little bit over time. But why are they still maintaining a presence and manufacturing in these countries? Because of that skill set that exists there. So it's the skill that might be missing as well in the U.S. that might take years to fill. So I think to do what President Trump is doing right now is a bit short-sighted in that like these are very quick impact that he's doing, but the long term we know like it's not possible, and it might take years to actually bring factories back. But by the time you bring these factories back, to your point, Michael, we might have complete automation robots like that are powering these factories. Just like in China, they're already talking about operating dark factories, right? So at
Yeah.
that
So
point, what's going to happen?
one point keep in mind that I think is also kind of lost in this conversation. I agree with everything you said. So the I don't think that the U.S. is actually targeting that low value manufacturing. I think what they're really looking to do is essentially to try and diversify their supply chain more domestically. So if there's critical components like CPUs or GPUs or whatever, they want to be able to have local production. And one of the major criticisms, especially from U.S. manufacturing companies, has been that the Chinese government has artificially subsidized, or not artificially, but essentially artificially deflated the market for a lot of materials. So if you look at steel and aluminum, the Chinese government will dump a ton of money into companies that produce those goods, and then they in turn flood the global market, or attempt to flood the global market with those goods in order to wrangle that supply chain, essentially to increase their market share. So I think one of the other major concerns that I haven't heard anybody come up with a solution to, other than diplomacy and trying to negotiate it, is they want that artificial, that thumb on the scale from the Chinese government to get to disappear. Because we saw this actually in airlines between Boeing and Airbus, where Boeing, they actually went to the WTO. This was litigated because they said, under World Trade Organization standards, you're not allowed to subsidize a domestic industry like aerospace, because obviously it's just a race to the bottom. So then the EU essentially has to be, or is looked upon to subsidize billions of dollars, the same way that Boeing is, in order to try and remain competitive. And one of the criticisms of China has been that they don't follow those directives. So the WTO has all of these rules related to world trade, and they don't follow them. They are artificially manipulating the cost of goods and the sourcing of those materials globally. So I think it would be really interesting to do an academic study on something like a higher value good like CPUs, to say like for like, if you look at purchase power parity and all that kind of stuff across the board between China and the US, and you have static sort of access to debt, the same sort of cost structures, or similar cost structures, I would really be curious how the costs would stack up. I think the point about actually rerouting and getting stuff built is totally valid. Like, it's going to take people that don't exist to stand up factories, right? Like, it's not something that the US has done in decades. So it's not as if they're going to be able to snap their fingers and get that done. But if hypothetically it were done tomorrow, I don't think that the cost, the argument that, well, we can't actually produce it anywhere near the cost that they're being produced elsewhere is actually true. I think we would be far more competitive if it were, a level playing field.
Yeah, I mean, it's questionable to because I mean, it depends on how efficient the U.S. can be in terms of efficiency and automations to really compete with a massive workforce that exists in some of these countries, right? Like we're talking about lower labor cost, right? And
Sorry, but I mean where the labor cost isn't the determining factor. So if you look at, again, like semiconductor manufacturing, that's a very, very low, like there's very little labor associated with that. For the most part, it's all automation. It's high precision equipment, right now out of Holland. And so if we were, the US or any country for that matter, were to have the knowledge required to spin up one of those fabs, labor, the cheap access to cheap labor isn't a determining factor in my mind,
I,
right? So,
I I was thinking like I thought they tried to do something like this with Taiwan Semiconductor in Arizona, and that never amounted to anything. Do you know what happened there, Kyle?
so it's still happening, and Intel has also taken a whole bunch of money to build a similar fab in Arizona as well. And from my understanding, again, it's not a labor issue. It's a skill and an equipment issue. And so the ability for them to acquire the lithography technology, and the equipment that will, and the, you know tens of thousands of ancillary components and, pieces that essentially go into one of these fabs. That is the major challenge. And yeah, so we'll see. And to be fair, like they've tried to onshore production of, for example, like I remember when Foxconn did a big deal, and that manufacturing facility went nowhere. I think it was for automotive glass or something like that, and it essentially went nowhere. They took a big tax break to build a factory that never got built. And the argument there was always like, this is never going to be, competitive, cost competitive. So and just to clarify that, that was compared to Taiwanese manufacturing. So it was far more about labor costs than, technology and automation. But I do think that for a large swath of goods, the ability for the US to compete on an automated system versus, an automated system in Asia, it has potential. And the same thing goes for any country for that matter. So, we have to ask ourselves in Canada, we're obviously a far smaller player. We need to really be, if we're going to take a big shot, we need to be clear about what that shot should be. And one of my biggest gripes, and we've talked about it previously, is the level of time and energy and money that's put into automotive, including battery production, when battery production is falling off a cliff and EV sales are falling off a cliff. Like we're doubling down on an existing industry because it's there, rather than saying, hey, where is the best place for us to put money, right? If we were going to look at this from a blank slate and ignore all the money that we've put in already and all the jobs that are already there, where should we be focusing our energy and our attention? And I think that's a conversation that, nations are not really having. The US is arguably having it now to say, like, we need semiconductors or we need this material. If it's defense related, like we can't rely on the Chinese to make our drones for us. Like, that's pretty common sense. So we need to do this from a national security perspective. But from an economic perspective, like where should we be spending our time and energy? And nobody's really having that conversation, especially in Canada.
You took the thought right from my mind in terms of automotive manufacturing and battery manufacturing. I was going to say the U.S. has perfected that because it seems like they have a lot of these, especially that Tesla Gigafactory in Texas, and I think they have some battery manufacturing facilities there that have scaled up quite well in the U.S. But you're seeing, Kyle, that that's not doing well. Battery sales are down. Everything's powered by batteries, and EV sales continue to rise. I'm seeing more EV vehicles on the road. Why
Sales are
would that
way
slow
down.
down?
So the battery manufacturing capacity in Canada, so the deals that the federal government signed were all based on OEM vehicle manufacturing. So these aren't like phone lithium batteries; these are EV batteries. and they're directed at OEM manufacturers. So the challenge that market, that industry has, is that the sales, the actual demand for those vehicles, not only is it been relatively flat, but it's been far, far less than the anticipated demand. And part of the reason there was a lot of government incentive, and essentially this is driven by the US, right? Like they dumped, I think it was four billion or something, probably more than that, 400 billion maybe, into essentially green energy, or the green energy transition. And they were pushing OEMs to start to transition to electric, fully electric. But the problem is that you need the consumer to buy the vehicle. So all of the large American manufacturers dumped billions of dollars into developing them. And as soon as they got production up, Ford's F-150 Lightning is a good example. They had to ramp down because people weren't buying them. And so I think that's the biggest challenge. And it's been a big wake up call for Canada. It's like, you guys, we don't need this capacity. We've essentially subsidized, similar to what I was complaining about with the Chinese. We as a country have said, we're going to spend tax dollars on incentivizing the production of this material or asset, this good, this battery, without having any sort of understanding or appreciation for the demand of that product. And so when the product doesn't sell, these manufacturers are like, they're laying people off. Stellantis this week laid off, I think it was 1,500 people in Ontario.
Yeah.
So it's like,
yeah, it's like the carriage before the horse. I don't think it doesn't help. I don't want to get off topic, but it doesn't help that you're ramping up, manufacturing when the infrastructure is not in place yet, to support all these, electric vehicles. And that's, I think, if you talk to most people, the reason why they're opposed to owning electric vehicles is because of this range anxiety and not having access to that infrastructure. There's not a lot of places like a gas station you can just pull up and charge your vehicle. They're very few and far between, aside from Tesla's, infrastructure, which is obviously far ahead of any others. There's not a lot of infrastructure in place. So I think that's part of the reason. There's lots of reasons, but yeah, I digress.
Yeah, I mean, yeah, like speaking of, what's interesting is that you guys are talking about EVs and stuff like that. I've been looking into Chinese EVs and the adoption rates there, and it's just phenomenal. Like some of these Chinese EVs, very competitive, priced at a very low price point, and a very competitive product. And I initially thought that, and listen, I love Tesla, like I've driven Tesla since, since the launch of the Model 3. But I'm seeing some of the Chinese EVs and they're very comparable products. And yeah, so I can see the demand continuing to go up there. And like having just came back from Asia, I see the adoption rate for EVs is quite impressive in
Yeah, so
comparison.
why is it high there? Is it because of the proximity of the cities? That's another thing. Canada is so spread out. The U.S., there's just so much land mass. If you had these 5 minute, 1 minute cities, what are the cities called when they're just
15-minute cities.
yeah, 15-minute city where everything is within 15 minutes, EVs make a lot of sense, or there's the infrastructure. But when you're driving from one city and you're driving an hour, 2 hours to get to another city, and there's one EV charger in between those cities, it makes a lot less sense. So I'm sure in China, it's set up a lot differently when you were there. They probably chargers everywhere. Cities are
Yeah.
dense.
They're probably been. I haven't been to China myself, but like definitely I can speak for Vietnam and like one of the local EV companies there. VinFast and they seem to be completely fine and they do travel quite a bit. You'd be surprised. I mean, you're stuck in traffic and it can be a half an hour drive, which is very efficient for EVs. So if you're stuck in traffic, it makes perfect sense.
It's a
And
distance. Like they're stuck in
yeah,
traffic. They do well in traffic, but distance. They're not traveling large distances.
they're
So
not.
I,
Yeah.
I disagree with both of you guys. I think it comes back to the ability to support it. Like, I don't think that we've seen the widespread adoption that we expect from any country. Like, yes, comparatively speaking, Europe and Asia are buying more vehicles. Like, look at Norway. So Norway has the most electric vehicle adoption of any country in the world, partially because tariffs, they charge, I think it's a 60% tariff on any vehicle. And they waive that 60% for electric vehicles. So everybody was like, well, this is by far the cheapest vehicle, so let's go buy them. but they're also dealing with infrastructure. And Europe, especially, granted its high density, people can't charge them because they don't have the infrastructure, especially at home. A lot of people live in apartments or flats. They don't have garages. They're relying on public street chargers that are not working, or they're far outnumbered by the number of vehicles. And most importantly, friends of mine in England, the cost of charging is now greater than the cost of petrol or the cost of gasoline. So the market, and it's a huge markup in terms of profitability of these third-party chargers versus if you were to charge at home. But if you are reliant on that third-party charging network, it's no longer cost competitive. And so they're asking themselves, like, well, what's the benefit of us doing this? We have to wait in line for a charger. We're going to spend more than petrol. We're going to spend more than the car costs in the first place. It's kind of hit that, and the same thing's happening in Norway. It's kind of hit that sort of limit of like, what is the true, amount of penetration here? And, I've always read, and I could be wrong, that China has produced significantly more vehicles than people have purchased. Like the demand for those vehicles, yes, it's been good. It's been higher than other countries, but it's not nearly as much as people were forecasting or the manufacturers were expecting to be able to produce. So I just don't see it happening. I don't see it materializing. I don't see that as, again, if I were a country and I were going to, roll the dice and try and invest in something, that is not in my top 10.
Yeah, China, 22% of new car sales are electric vehicles. So yeah, it is quite low, 22% in China. And you're right,
But that's got to be one of the highest nationally, or
well,
internationally. So
other than Norway and Sweden, yeah, yeah. So yeah,
But
it's quite
I
low.
think it has to pick up. I mean, look, like the pollution over there and everything's dropped drastically. And you look at some of the, very polluted cities in China, it's dropped drastically. And I mean, they have had a lot of initiatives to try to reduce a lot of that pollution. And I think electrification of vehicles is one of the things that they have to do,
yeah,
right?
I agree. I
So
think it's going to happen. I don't think it's going to happen at the rate or as soon as people think it is.
Yes.
But
Well, let's agree there, because I think it's inevitable, to be honest, but it's going to take a lot longer than everyone thought. So yeah, let's
so,
talk.
okay, good segue to the election then. So
Yes, let's talk about that.
in terms of priorities, what should we be prioritizing? So, Andrew, would you say that we should be prioritizing EVs or the infrastructure to support EVs?
Well, I think if I think and I'm not speaking specifically about EVs, but there are many things that Canadian companies are doing very well. They should be really focusing on that, right? Like some of the companies I've been looking at are some of the space companies in Canada, like MDA, for example, space. They're operating fine, and I think they're profitable companies. And some of these areas, Canada can really be a leader in it because it is new. Right. So I think I think we should be prioritizing new industries and really kind of become more independent of the U.S. and be a leader for some specific segment, some specific industry.
Well, supporting the theme of our podcast, Canada needs to do a better job at supporting businesses, independent businesses. And you know what? I was reading an interesting article from the Canadian Federation of Independent Businesses, and they actually surveyed business owners and businesses across the country, asking what were some of the most important topics that they were interested in, or some of the pressing policies that they were hoping to be achieved by the new incoming government, or some of the things. Like there was 13, but I'm just going to mention a couple, and you guys let me know if you align with these. So one was carbon tax. Most people said that they want to formally pass legislation to eliminate the carbon tax, especially for small businesses. Federal small business tax rate. So right now in Canada, the federal small business tax rate is 9%. People are pushing back, saying that should be lowered to 0% on the federal side. Pushing up the lifetime capital gains exemption. So that's something else that's policy that's of interest and would benefit small businesses. Payroll tax is another thing. Lowering the payroll tax, because in Canada right now, employers pay a higher rate of payroll tax than employees. So there, a policy that would really help support businesses would be to match that rate. So employers are paying the same amount of payroll tax as employees. And then internal trade was the next big thing, just kind of reducing a lot of the internal trade barriers, which came up in one of our previous podcasts where the, provincially there's so many trade barriers that so many people are not aware of, make it easier to trade internally from province to province. So that was just like 4 or 5 of the key factors when we were interviewing, or the CFIB was interviewing business owners. I think we need to support industry here in Canada. It's weakened, and we could feel it in the past decade. It's weakened.
Yeah, like there's one policy that I thought was is kind of interesting, and is the policy from the conservative that came out about capital gains, about how capital gains is exempted from investments that are being reinvested back into Canadian companies. I thought that was a very interesting way to get capital to flow back into the country rather than being invested into companies outside of Canada. So that triggered me to think about the struggle of some of us that have tried to raise capital about how unattractive it is to investors to invest in Canadian companies. First of all, we're a smaller market, right? So we can never compete in terms of having the large consumer base like the U.S. But if you counteract that with some incentives for people to reinvest that money back into Canadian companies, that would essentially incentivize investors to invest in small startups and essentially giving them the capital to create jobs, to create companies, to start essentially innovating. Like, there's more companies that will probably start to innovate and more businesses. You're incentivizing people to start businesses and hire people, right? That I think is a very interesting policy, and I'd say that that's a policy that would definitely help the economy and help Canadian business owners.
Yeah, that's a really interesting idea. I hadn't come across that before. But it's a really interesting point because the vast majority of our Canadian investment dollars are sitting in U.S. equities or U.S. companies, right? And we're going to support their balance sheet rather than supporting Canadian companies. And but it's interesting because yeah,
There you
lowering
go.
taxes.
I'm just throwing it on the screen so you could see. These are the top priorities for the next federal government. This is from the CFIB. Look, there's the list. Pretty
Yeah,
interesting.
and I think
Taxes,
that
tariff,
the
budget,
tax
red
piece is
tape.
like
Mhm.
it's a far broader conversation because like when we were in the US recently, um, the announcement Donald Trump made the announcement that he's going, I don't know if it's happening or what, but he suggested that he would allow purchasers of US vehicles to deduct the interest cost from taxes, from their income tax. And it's interesting because it started a conversation about the deductibility of costs in the US to begin with. So if you compare the two countries, the US is far more generous in the types of costs that you're able to deduct from income tax or taxes payable. So for example, as an individual, you can deduct the interest on your mortgage, right? And for domestic businesses, depending on the type of equipment that they're purchasing, there are classes, and I'm pretty sure this is still in existence, where if you purchased a bunch of materials or an equipment, you were able to deduct that 100% in the first year. So essentially, you got the clawback rather than whatever would be
Appreciate it.
30% per year. These businesses were able to deduct that right away. And so I think we really need to have a national strategy on tax to say this is actually a huge drag on the economy, especially for businesses. The complexity is one thing because it's definitely complex and it can be simplified, but like we're not competitive. If we expect to be competitive with our neighbor, we need to actually be competitive across the board. And tax is arguably one of the biggest drags, one of the biggest costs to businesses, especially to startups and scalers.
Mhm.
If we remove that, and coming back to Andrew's idea, and we do that in tandem with an incentive to keep more capital nationally and invest it domestically, I agree. It's going to spur a lot more investments in productive assets. So it's going to improve our productivity. It's going to create a lot more startups because there's going to be more money going around.
Just
And I
free
think
some more
I heard
capital.
this on another podcast. They were talking about from the U.S. perspective. There's not enough of the population that own assets, own companies, U.S. equities, and just imagine what it would do for national pride if everybody were incentivized, or it was very easy for them to essentially own a part of a Canadian index, right? Like we would, rather than uh, not supporting businesses or not being able to, um, you know, keep the capital domestically, the nation would all be like cheering on our local businesses because we're owners, we're shareholders. So I think there's a whole lot we can do from a national priority perspective to say, like, let's actually prioritize this. Let's make a concerted effort to make this easier.
Bring back capitalism to Canada. It's been
Yeah.
going down. It's been, yeah,
Yeah.
it's been going down the path of socialism. If you think about it, it's just we get taxed every angle. You get taxed on business income. You get taxed on payroll tax, income tax, uh, property tax, capital gains tax, personal income tax. And the problem is that all this tax, like you two are mentioning, it's just locked up. It can't be yielding any kind of return. It's not being reinvested. It's not stimulating any new production. And the issue is that we're giving all this money to the government of Canada. And what is the government of Canada doing with these funds? There's subsidies. So even if they put a bunch towards subsidy, if capitalism is of the mind frame that rather than giving the money to the government to manage and have the government then decide how to give that back or how to reallocate that, make the government smaller, take less, and let individuals manage that money. And that's how capitalism thrives. I don't want to pay the government all my money and then have them subsidize me back for doing something that qualifies for a certain type of grant. Just let me keep the money and build the business with that money.
And most importantly, I think it allow us to do it because we're probably better at doing it or more
Yeah.
efficient at doing it than the government is, right? Like, I don't know. I agree 100%.
No, it's interesting that you guys said this because, one of the bank, the BDC, I think I shared this with you, Mike. They essentially, one of their funds were struggling, and they had to let go of a bunch of people that were managing some of these deep tech funds, and that's essentially who's funding this BDC. It's the
The
government.
government.
The
Yeah.
government is investing in startups, and they're the one who controls where the capitals are flowing into innovation. They're the one who essentially gatekeep this capital. Instead, to your point, Kyle, and I completely agree with this, is that we should essentially decentralize that and let the individual investors and the market dictate what companies deserve funding and which companies doesn't. And we probably have a better idea of which companies will thrive and do very well than the government, right? Like where you have a couple individuals that are not doesn't have skin in the game, making decisions on where to allocate capital to startups to start. And to me, it's I agree. Like the individuals, the market will probably have a better sense to dictate the success of these companies. Right. So
Yeah.
yeah,
These,
good point, Kyle. That makes perfect sense.
yeah, these government funded, you know, providers such as like, for example, the BDC, they do good things. They do some good things, as Trump would say. But however, I think they could be done better. And if you look at any of the, government subsidized providers, the BDC, certain airlines, healthcare, there's just so many ways, transportation, so many ways that could be done better. I'll give you an example. I was speaking to a client last week, and they're doing a massive restructure. They've grown by like tenfold. So they're bringing consultants to do this, and the BDC has provided these consultants, and they're at a heavily subsidized rate. Like they're getting this whole plan done for like $20,000 with a whole team of consultants to come structure this deal from the BDC. He says he took this out to the market to the Accentures and the KPMGs, and it was like 7 times the price to go through an Accenture or a KPMG because of the level of subsidization. So yeah, that's great. That helps small businesses, or that helps businesses. But why not, rather than do that, just, unlock that capital, tax the businesses and individuals less, so they have the money to then have the choice of where to deploy it. It's just kind of like they're trying to flow it back to us through these services, but the services aren't necessarily really good services anyways, and they're not run well. They're over subsidized. There's lots of leakage.
No, yeah, like I say, I'd rather build a billion-dollar company or $100 billion company and pay that 7 times to KPMG or whatever to have my services done, right? That is and employ 10 times more people. And
Exactly.
that's much better than having these subsidy and trying to save here and there. It doesn't make any sense.
Yeah. Yeah, I agree. All right. Final thoughts before we wrap. Any other priorities that we should be focusing on before the election?
I
Mike?
guess everyone really needs to get out and vote. That's important. Let's
That's
just,
Yeah.
important. Very good one.
I'm sure people know this by now. They're tired of hearing it, but it's very important, to do your research. Everyone needs to do their research, know what each party stands for. Don't just go based on what you hear from your friends. There's lots of tools out there now that are available where you can do research. You can follow these politicians. It would be nice if these politicians had a little bit more accountability, like we talked about in some of our previous podcasts. Not to say that these politicians will follow through on 100% of what they're preaching, but I think it is important to at least know what the platform entails and make sure you're making an educated decision when going to the polls in this upcoming election, which is in a few weeks. So do your research, get out there and vote.
I echo the same thing, Mike.
Couldn't have said it better myself. All right. Let's leave it there. Thanks for joining us, and we'll see you next time.